Good evening, everyone. It is my pleasure to introduce tonight's Distinguished Speaker Series guest, Bart Houlahan. Given we here at Fuqua are strong believers in the ability for business to be used as a force for good, we are privileged to hear Bart speak tonight, the day before Fuqua's Sustainable Business and Social Impact Conference. Bart is the co-founder of B-Lab, a nonprofit organization dedicated to using the power of business to solve social and environmental problems, as well as the administrator of the B Corp certification. Prior to B-Lab, Bart was the president of &1, a basketball footwear and apparel company, so his basketball roots are very much appreciated here at Duke. Over the course of 11 years, Bart helped finance, operate, and scale the &1 business to $250 million in brand revenues with distribution in 80 countries. However, it was the outcome from the eventual sale of the &1 business that drove Bart and his partners at &1 to co-found B-Lab in 2006, which now has over 3,200 certified B corporations across 50 countries. Bart is a graduate of Stanford University, a member on numerous boards, and an advisory board member of the Center for the Advancement of Social Entrepreneurship, also known as CASE, right here at Fuqua. Thus, it is not difficult to see how Bart is a true leader of consequence. So on behalf of Fuqua, please join me in welcoming Mr. Bart Houlahan.
So Bart, we're so happy to have you here and to have you provide an unofficial kickoff to the SBSI event tomorrow. But so the good stuff is already happening. So I'm going to ask you a bunch of questions, and let's kind of level set here in terms of where you're coming from. So you're not a big believer in capitalism?
I wouldn't say that, Dean Boulding. You know, my background is first and foremost as a business person. Though I run a nonprofit right now, I left college, went into investment banking, worked on Wall Street. I love the work, but frankly, didn't find my place with the people in New York. And so I moved to Boston and continued with a boutique investment bank for another 5 or 6 years before I ran into my lifelong friend who had started &1 basketball. Any people familiar with &1? Anybody unfamiliar with &1? So for those of you who don't know &1, it was a basketball footwear and apparel company. If you took like Adidas basketball business and set it to the side, that was &1. We grew to about $250 million. And so no, I'm in my heart of hearts an entrepreneur, a for-profit entrepreneur.
Okay, so like Milton Friedman advocate?
Well, that probably is a bridge too far for me.
Okay, just again, calibrating here.
We'll come back to that, I'm sure.
Okay. So let's start with the &1 story, where having heard you talk about &1, it sounds like you ran that company, you and your fellow &1 team, you ran it as if you were adhering to these standards of a benefit corporation. And so where did that come from in terms of your leadership style, your values? Did that come from your time in investment banking? Did it come from your family? Where did those values come from?
Without question, I think you can trace everybody's values to some degree back to their parents. And so my father was a college professor for 16 years and then an entrepreneur himself, transferred into the business world and ran a architectural photography company. And my mother was also an entrepreneur. She ran a series of restaurants in the Chicagoland area. And I remember growing up part of those companies. You know, I went to the Hedrick Blessing family picnic every year. I went to the Convito Italiano, which was the name of the restaurant, monthly celebrations. And so what I was receiving was the idea of business as an extension of family. These were small businesses. And when I was presented with the opportunity to be part of the leadership team at &1, we started with a blank page. We could build whatever we wanted. And it made sense to us to build a company we could be proud of. A company that took care of its employees, treated them like family, a company that approached our supply chain overseas as an extension of our family, and therefore make sure that we took care of the folks who made our products overseas. A company that was in and of a place, that was place-based. So we engaged deeply in our community in the Philadelphia area. Just a place to be proud of. And so it wasn't, the term socially responsible business, I can promise you, was never uttered at AN1. It wasn't, let's try to be one of the best at CSR. That we didn't even know what that term meant. It was trying to build a business where it was values aligned, and you were proud to be there. And it paid for itself many times over.
So you have told this heartbreaking story of you build this really incredible business where you are valuing all these stakeholders, and then you come time to sell the company and you realize that you have a fiduciary responsibility and all you can look at is what's going to maximize shareholder value. Did that catch you by surprise when you reached that point, or did you know full well when you were going through this process of selling that was going to be the only thing you could look at?
We weren't ignorant. We had done a leverage recapitalization probably 5 years earlier, where we brought in TA Associates to take some risk off the table. And so they put $30 million into the business at the time. And we knew at that juncture, Dean Boulding, that we were headed towards some liquidity event. I think at the time we thought it would be an IPO rather than a sale of the company. But no, we were certainly aware of our fiduciary duty. And I would say even before the sale, as the company scaled, it became clearer that it was harder to continue to consider the impact of the decisions of our business on our workers, our supply chain, the community, and the environment. I remember we had a product that was called the Chillins, and it was the first effort to take a athletic profile into the casual shoe area. And so Chillin meaning to chill in. Clever, right? So we had the shoe, and it was born out of the realization that the number one shoe worn by basketball players, and I think still today, is the Adidas soccer slide. If you watch ball players going to and from the court, they wear that sandal, right, with the 3 stripes. And that made no sense to us. Why wouldn't you have a basketball shoe that you were wearing off the court? So we created this line called the Chillin, and we wildly overbet on that product. The product grew our overall revenue base by $100 million. And in 18 months, it dropped by $90 million. And I can tell you, when you have 150 investors, including TA Associates, and your business goes sideways like that, it is acutely difficult to continue to talk about the impact of your decisions on workers, community, and the environment. It was only until the moment of sale that we realized at that juncture that there was no optionality. That by law, as a Delaware corporation, at the moment of liquidity, you're required to take the highest offer on the table if you have a variety of shareholders, right? And so as we were evaluating the multiple options in the boardroom, there was no conversation about the mission of the organization, the purpose of the business, the staff that we had built, the supply chain that we invested in, the environmental efforts that we had created. The only conversation was which was a cash offer and what was the highest number. And for those of you who don't know the ending of that story, and it's really important that I preface this, that the gentleman who bought our company bought it for a great price. He paid us totally a fair price, and it was his business to do what he wanted thereafter. But as I was telling you earlier, within 6 months, he had terminated all of our employees. He eliminated our entire ethical supply chain. He got rid of our charitable giving practices. He got rid of our direct service program. He got rid of all of our environmental efforts within 6 months. And yeah, that didn't feel great. You know, it felt like we had invested, for me personally, 11 some odd years in building an organization that kind of had purpose at the center. And in 6 months' time, it was completely eradicated.
So in addition to selling the company, did you walk away with a closet full of merchandise that you can break out every now and then?
Believe it or not.
Do you have any Tachillins still?
I do have some Tachillins. I use them. This is incredibly sad, but true. I use them to garden in. And so imagine an old man now walking around in his Tachillins in the garden. So yes, I do have some Tachillins still hanging out.
So to be more serious, as you've gone through that sale, obviously you're then moving into the next phase of your life. You're going to try to figure out what to do. You see what you've built slowly being dismantled.
Not slowly.
Quickly.
Not slowly, yeah.
So when did you have the epiphany that the next thing was this whole B-Lab idea? How did that come into being?
It was honestly a natural evolution for us. You know, I was talking that the same college roommate who started AN1, was one of the 3 founders of AN1, who convinced me to join the business when it was $1 million t-shirt company. He and I got to talking as we were going through the sale process. We were trying to figure out what was next. And he had been the driving force at AN1 around our efforts in social responsibility. It was really imbued in who he was to his core. And so he was trying to figure out what the world would look like. And as we saw what transpired with AN1, it became clear to us that like there had to be a better way. You know, there had to be a way that a company could scale, raise outside capital, bring in new management, and even have a sale of the business, and if they wanted to hold on to the mission of the company. And so as we were evaluating what would come next, we knew that something together was appealing, and having just experienced this together, B-Lab came to being. And we went out and found another college roommate who at the time was in private equity, and sold him on this idea.
So that was a natural
shift for him, yes.
Okay.
We can come to his story too if you'd like. But sold him on the idea that we want to try to develop a better way. And so he jumped with us to founding B-Lab. And admittedly, the inception of B-Lab, our mission was pretty narrow. You know, it was the idea of how do you preserve mission if you want to. And what we learned pretty quickly was we were ridiculously ignorant that there were hundreds of thousands of companies out there that are already were using business as a force for good, but the market just wasn't kind of accelerating. And the aperture of our lens for the mission of the organization broadened. And we embraced a broader idea of perhaps we can be helpful with many, many, many others on trying to fundamentally shift the role of business in society and really harness the power of capitalism for change to address the world's great challenges. And so that was probably a year before we started B-Lab, and then another year before the mission of the organization went from this pretty narrow focus to one where we wanted to be helpful to trying to build a movement of people using business as a force for good. And so that's the core mission of the organization now.
So in that process, I mean, you come from this background of banking, and then another of your founders from private equity, so again, the world of finance. How did you deal? I'm sure you had former colleagues, current colleagues who said, look, this all sounds good, but the reality is that if you don't maximize shareholder value, you're not going to be doing what's best for the company. So how did you respond to those, what I'm sure are ongoing attacks?
Yeah, it is fair to say, Dean Boulding, at inception, we were viewed pretty much as flat crazy. You know, the idea of building a movement of people using business as a force for good and trying to shift systemically the purpose of business early on we were out on a limb without question. And then a few things happened. 2008 happened. 2008, as you probably hopefully all remember, was the beginning of the Great Recession. And what was wind in our faces for our first 2 years, we started to feel a small draft at our backs coming out of the Great Recession, where mainstream voices were calling for an evolution of business. And I would tell you that was, I know it inflicted enormous damage on the economy and on the world. If there is a silver lining, I would posit that the conversation around stakeholder capitalism that seems to be in the zeitgeist today was accelerated because of what happened in 2008 forward, that we as citizens decided that there was something more that we should expect out of business, that they needed to play as a sector a different role in the economy. And the seeds were planted, or at least grew more rapidly coming out of that downturn.
So people before B-Lab, as you know, there were lots of people interested in these questions. I mean, Klaus Schwab keeps reminding us that he was talking about stakeholder capitalism 50 years ago. The key thing that you brought, was it the idea of certification? Was it the idea of legislation? I mean, what really sets you apart in terms of advancing this movement?
Yeah, I think, so first I want to acknowledge that you are exactly right, Dean. This movement existed long before B-Lab. We stand on the shoulders of amazing work by individual organizations and nonprofits whom we are the great beneficiaries of and we continue to work with. I think there were a few innovations that B-Lab tried to pioneer. The first was the recognition that the market was moving from all of us, not just patronizing a good product, but instead patronizing a good business. That the evolution of the marketplace was moving from all of you wanting to work for, buy from, and invest in, not just an organic apple, but the company that was actually harvesting those organic apples. And so the idea of looking at the whole was one of our innovations. But I'd say the other two were more important. Because the marketplace at that time was made up of 300 plus beautiful certifications that were all stovepipe oriented. They were about a particular product or a particular practice. Nobody was really looking at the whole, and so we put together an assessment that allows you to measure, manage, and improve the whole. Looks at the impact that you have on all of your stakeholders, and the idea for the first time to offer a tool that allows a company to draw a roadmap towards stronger and higher social and environmental performance was novel. And so the first innovation that I think was lasting was the idea of looking at the whole and providing a management tool to allow companies to actually change their behavior. That was one innovation. And then perhaps the most important innovation that I hope, knock on wood someplace, will be what will last is the idea of fixing the source code error in corporate law. And so what I mean by that is if we all consider a business, it impacts an enormous array of stakeholders. The idea that the law elevates only one to be legally accountable to doesn't make a ton of sense. And many of the outputs and outcomes we're seeing from business, I don't think are because people have malicious intent. Far from it. I think it's the nature of a source code error in corporate law. And if we could simply fix that source code error and replace maximizing shareholder value with the idea of balancing the impact of your decisions on all of your stakeholders, I think we'll get different outcomes out of business. If you really want different outcomes, you got to change the rules. And that's what we're trying to do. And so those to me are the three innovations that B-Lab brought, and it is the last one that is about our systemic change we hope to bring about. The idea of fundamentally changing fiduciary duty in business so that companies have to balance, are given the permission and protection, and also are held accountable to considering how their decisions impact all of their stakeholders, workers, community, the environment, and of course, their consumers and their shareholders.
You said something interesting earlier today around this legislative aspect, which is you said that you've had success in a way that is totally nonpartisan, that doesn't matter left, right, middle, everybody seems to support this. Why is that?
Well, to give the room a sense of that progress, we've created a new corporate form, something called a benefit corporation. So you can now register your business as a new legally recognized corporate form. You can choose between a traditional corporation, a nonprofit corporation, or a benefit corporation. And you can do that in 38 states and 4 other countries. And it's on the docket in another dozen or so countries. And so we expect it to continue on. And this legislation was signed into law by Mike Pence, by Nikki Haley, by Bobby Jindal, as well as by Andrew Cuomo and others on the left. And the truth is, the idea of using business as a force for good is something that everybody can get behind. The left, because it is trying to use the power of the private sector to address climate change and wealth inequality and the other great challenges we all face. And the right, because it's a market-based solution, right? We're lifting up the power of the private sector to create public benefit. And if we're successful, it even offers the option of potentially shrinking government. And so there is both left and right support for this, so much so that Dean Boulding, on 27 occasions, this legislation passed unanimously. Now, if we've been watching the political landscape over the last decade, like that's pretty unheard of right now, sadly. We're in a bit of a difficult spot, but this was a bipartisan effort that we got folks behind from both sides of the aisle. And in fact, one of our strategies was to try to find, every time we introduced the legislation, bipartisan sponsors to lead us off so that we could start the day with people already understanding that this is not contentious, that this is an opt-in market-based solution.
So not only have you gotten bipartisan support, but now you have broad support in the business community coming out of Davos, coming out of the Business Roundtable. You know, all kinds of high-profile CEOs are endorsing the idea of stakeholder capitalism. Your observation was, I hope they don't co-opt the movement such that stakeholder capitalism doesn't mean anything. Can you elaborate on that?
Yeah. So before we get to the cautionary tale, let's start with recognition of an amazing moment in the history of capitalism. I think it's worth just pausing to say the fact that 181 of the largest company CEOs produced a white paper calling for a new purpose of the corporation, moving us from shareholder primacy to leading businesses for all stakeholders, that is an enormous cultural shift that we should applaud and be excited about. And that followed up by the new Davos Manifesto and their embrace of stakeholder capitalism. It's indicative of a really important moment where people are recognizing that business indeed has impacts beyond just their shareholders. what we also need to be remarkably careful about is what we'll term stakeholder washing, right? Like we all lived through a period of quote unquote greenwashing where everybody claimed to be green, sustainable, responsible, take your pick. And until you both measure it and you're accountable for it, it doesn't mean a whole lot. And so our response, our community's response to the Business Roundtable announcement was first, welcome, welcome to the party. There's been people working on this for a while. We're delighted you're coming to the right side of the ledger. And it's time to put money where your mouth is. It's time to actually put real actions behind what you're terming the new purpose of the corporation. And there's tools, lots of tools you can use to do that. You can, one, measure it using our tool or the Global Reporting Initiative or any number of tools out there. You should be transparent with that measurement and share with folks not only where you're excelling, but your areas for improvement. And perhaps most importantly, if you're gonna say that the new purposes of business is to lead for stakeholders, be accountable to that. And there's a legal framework that allows you to do that. And so we're at a moment right now where I honestly believe stakeholder capitalism has the possibility of truly being the economic system of the next century. It also could be a footnote that we forget about within 5 years. It's not going to be in between.
Mm. So you've said there are all kinds of studies, there's just tons of evidence that if you follow this model, that it actually improves performance. So it's not a trade-off between doing better in terms of profits long term or doing good. It's that you can do both. And so if that's true, why don't companies all adopt this? I mean, they can all do better if they're they can make their organizations better while they're doing what's best. Why not?
Yeah. So there was you slipped two words into that question that I don't know if the audience picked up on, and those were the words long term. So first, yes, there is overwhelming evidence by a huge array of consulting firms and academics supporting the idea that stronger environmental, social, and governance practices results in long-term value creation for the company. And that long-term value creation is for the shareholders as well as for society. And so this is not concessionary. You can operate a business this way and actually create better long-term value for your business. Number one, that is long-term, and we have enormous market forces right now that expect short-term results. Whether it is our quarterly reporting or the incentive structure in the financial system, the capital markets are not particularly welcoming to long-term solutions right now. And so we have a misalignment between what we're incentivizing in the capital markets and what we're expecting out of businesses. And so that's first. And so, yes, I think the debate should be over about whether this is concessionary, but it is not concessionary in the long term. And then secondly, I think it's worth elevating a second question. And the second question is, if business is accountable to something beyond just shareholders and it must consider its impact on all of its stakeholders, I think the second question we should all be talking about as well is, well, then there probably should be some room, if you're really trying to reach balance, for trade-offs. That we should be willing to accept a company that decides to make a trade-off between even long-term shareholder value and what could be a profound impact on a stakeholder. And the reason why I say that is because I at my core believe that the purpose of business is broader than just creating private wealth. I think business should be required to consider not only value creation for shareholders, but the value it creates more broadly for society and the environment. And if we expect that out of business, we should also be willing to accept a balance of how it treats all of its stakeholders, and a balance requires, on occasion, tough decisions around trade-offs. And so that's what our legislation does, Dean. Our legislation creates the opportunity for a business leader to balance those interests. And in that balancing, of course, at times there'll be trade-offs between those different disparate stakeholders.
So you've said that the time when, as you're talking to companies about their willingness to go down this path of being held accountable to all stakeholders, you said the one thing that they really pay attention to is this is going to help you compete for talent. And to kind of back that up in terms of the data that just came out about 2 weeks ago, the Edelman Trust Barometer reported that 73% of all employees really view their jobs as a platform for adding value to society, that they see this as a way to bring meaning and purpose to their lives and the lives of others. So completely consistent. If you want to get those people, you're going to have to offer them something that provides that platform. Same results also indicated that 2/3 of all customers will make their buying decisions on the basis of what they think is good for society. So that all sounds fantastic. So we've got customer stakeholders, employer stakeholders, all trying to do, not all, but the vast majority trying to do the right thing. And then we get to, and so is business good for society? And 56% of people say business is harmful to society. What's the disconnect? Why are we not able to capitalize on these employees with a passion for doing what's right and the customers with a passion for doing what's right? Is it a leadership failure? Is it a structural failure?
I don't think it's a leadership failure. I think it is a structural failure. And I think the structural failure is born out of two incredibly powerful forces. One is normative behavior. We, for 50 years, this is the 50th anniversary of Friedman's essay. Milton Friedman, University of Chicago. And for 50 years, there has been cultural norms that business exists to maximize profitability. Prior to Friedman, I mean, you can go back to why people earned a charter, like why you got a corporate charter from government. Previously, you had to demonstrate that you actually were providing some value for society. That's how corporate charters were awarded. And we've had 50 years of cultural expectations that business exists to create private wealth. And that's an enormously powerful force that should not be discounted. I would also add to that legal impediments. And the legal impediments are at least twofold. First, we've already talked about one, the benefit core structure, and fundamentally shifting the legal requirement of business from maximizing return to shareholders to the requirement of considering all stakeholders. But Dean, building on top of that, we also have to talk about investor fiduciary duty. And so going along with this will have to be a shift in the legal requirement for investors as well. Investors right now have a fiduciary duty of managing the money that they are entrusted with to maximize the return for the asset holders. And so we've built this normative behavior through cultural expectations coupled with a legal framework that reinforces the normative behavior. And of course, it's difficult to shift. It is, we're up against massive institutional forces that have only been accelerated for 50 years. A few other things that with regards to the data, because I think there is beautiful data about consumer behavior increasing consumer loyalty for companies that consider both societal and business interests, access to capital through the growing SRI space and what we see with regards to a significant amount of money being deployed with sustainability as one of the lenses used for investment preference. I would tell you that when I do these talks with a traditional business audience, when I talk about consumer behavior, largely it's discounted. It's sure they say that until they actually go to the store, and then price drives the decision. When I talk about the $12 trillion in the sustainable investment community, it's largely dismissed by traditional leaders. But when I talk about attracting and retaining this generation of talent, the data it's overwhelming. I mean, the data is overwhelming that what this audience wants from their work is really different than what you and I wanted when we graduated. And I admit, when I graduated, I went to Wall Street. I was trying to make as much money as I could, as fast as I could. And when I went to work every day, I checked my values at the door with my coat, sat down in my cube, worked 90 hours a week, and then wrote a check to charity at the end of the year to try to write away my guilt. There was a dissonance between how I lived my life at work and what I did outside of work. I don't think this audience is putting up with that anymore. I think they want to bring their whole self to work. And I think the data is really clear that they're looking not only for money in the work, but meaning and purpose. And there's been really compelling data about the trade-offs that they're willing to make sure they find a vocation rather than a job, and a vocation that has values and purpose at the center. And so, yes, if you were to ask me what I think the driving force for the next decade of stakeholder capitalism will be this community demanding authenticity from the organizations they join. That they authentically are considering how they can contribute, not just to the bottom line, but to society and the environment at the same time.
So you told an interesting story, which wasn't really a people story, but a financial story about Danone, as the challenges of scaling, and they've been one of the best examples of scaling. And you told a story about how the CEO had cut a deal with his bankers, whereas they increased the proportion of benefit corporations as a fraction of the company, that their basis points on the loan would go down. How did he talk the banks into that?
It comes back to that ESG data, that fundamentally, folks, this is a risk mitigator. Like, if you run your business considering something beyond just the financial performance, and you consider your environmental profile, your impact on society, and your governance practices, ESG, that it actually makes a company more resilient. You build better relationships with your workers, your attrition rates drop, you build better relationships with your supply chain, you're more in touch with your consumers, and it mitigates risk. It allows a company to survive the volatility of markets. And we all know that, certainly I felt that firsthand at AN1 when we ran up, we doubled every year for 8 years, and then in a single year lost $90 million. And so yes, you have this, that is the reality of business. And what Emmanuel Faber, the CEO, and his CFO were able to convince their banks, a $2 billion line of credit with 12 bank consortium providing the capital, that indeed the percentage of the business that is certified as a B corporation will continue to mitigate risk on their bank line, to the degree that they are lowering by basis points the interest rate in direct correlation to the percentage of the business that's certified. And by the way, that has now been emulated by dozens of other certified B corporations.
Okay, I'm going to ask one more question and then turn it over to the audience. So the question is about the evolving role of the corporation, and so we've talked about the stakeholder notion, obviously. But we've also seen the failure of other institutions to provide what society needs. Easy to see you mentioned the political environment, where unanimous votes are not the norm.
Yeah.
And so do you see the role of the corporation further evolving to step up and do more for society because other institutions are no longer able to do so?
It must. It must. We're at a moment when we're facing a unprecedented challenge. And I've told this story earlier today to a few of you. We had a summer where the Amazon was on fire and the Bahamas were underwater. Then we moved forward to the fall, and Australia was on fire and Venice was underwater. The existential threat presented by climate change is really very real, and I think the broader business community is acutely aware of that, honestly. You couple that with the fact that today, 2/3 of the world's population owns 3% of the world's assets. Wealth inequality is not new. This is a challenge we've all faced for millennia. But it is accelerating at an unprecedented rate where now 42 people have more money than half the globe. And you put those two realities in a world that is interconnected in a way it's never been before. Like, we all know exactly what is happening everywhere. And of course you have people rioting in Santiago and in Hong Kong. You have protests in Paris and in London. The civil unrest that has been born from these dual threats, from the climate marches to the wealth inequality marches, the commonality is an economy that's just not working for everybody. It's just not working for everybody. And those threats are arriving at the same time where, truthfully, government's struggling. Government is struggling not just in the US context, but in many contexts where we have increased xenophobia and increased populism and a regression from the liberal democracy model that was, for a century, touted as the solution. It is not, Dean Boulding, just the right thing to do right now to use business as part of the solution set. I honestly believe it's a moral imperative. Like, I don't know how we address climate change, wealth inequality, and the other challenges we all face when 77% of GDP is coming out of the private sector. That sector needs to be part of the solution. And the good news is we are one of thousands of folks working on this problem, and the energy behind it is real. What happened at Davos and what happened with the Business Roundtable was unthinkable 4 years ago. Literally 4 years ago. Not a shot I would have bet that 181 CEOs would have redefined the purpose of the corporation, and those CEOs included Tim Cook and Jamie Dimon, and Jeff Bezos. Like, not a shot. And so there's hope. And yes, I admit to being a bit of an optimist, but I am incredibly heartened by the leadership we are seeing broadly from the business community stepping into the vacuum, because I think it's absolutely necessary.
Excellent. Well, on that optimistic note, questions from the audience?
Hi, Bart. Thanks for being here. You spoke a bit about the certification saturation that we're seeing, as well as some of the greenwashing we've historically seen from firms.
Yeah.
So how do you at B-Lab suggest addressing consumer fatigue with these certifications? And what do you say to businesses that critique certifications as just simply an addition to their impact platforms already?
Yeah, it's a great question. It's a great question. And I'm the first to tell you that I think our certification is a means to an end. All right? My honest opinion is I'm not sure that we all need another bug on the side of a coffee bag. Awful lot of bugs going around coffee bags right now. And so I guess the question that I would ask us as intelligent and educated consumers to think about is what is the point of that certification? And if we back all the way up to what we're trying to accomplish, at the end of the day, I care less about the 3,200 certified B corporations and its growth as I do to the 100,000 companies that are trying to be more like a B corporation. At the core of what we're trying to do is to try to demonstrate that there indeed is a better way, and we can manifest it in this community of leaders, and then we can give tools for others to follow. And so I think you're asking a really important question, and at the core of the question is, what's the intent of the certification? And so for me, it's about systems change. And our community of leaders know that they exist to try to inspire others to try to follow in their footsteps.
Hi, thank you for coming here. I know that the B-Lab certification and the benefit corporation law hasn't been around for too long, but have you seen any sort of difference in the market capitalization of companies that have these certifications versus those that don't? And does the market punish them, and how do they deal with that if they still want to get this certification?
Yeah, great question. And so first, it's fair to say that the data's thin, right? There just isn't that many examples. That being said, there have been dozens upon dozens of certified B corporations that have sold their businesses successfully. And in many cases, those sales have far from come at a discount on traditional multiples. And in fact, in some places, it actually has been a way that the buyer knows that they can assure the consumer set that the values of this business is being maintained. And so, for example, Unilever, I think now has bought 9 certified B corporations. And after they make the purchase, they hold on to the certification. Like this marketplace for a long time was littered with brands that were purpose-driven and then got bought by major multinationals, and the consumer set lost faith. They didn't believe that the new owner that was trying to scale the organization was going to maintain their commitment to social and environmental performance. Well, we helped to solve that problem. So one, from an M&A perspective, I could point you to dozens of stories of companies that have sold and sold effectively using the certification as an actual asset in that sale rather than a liability. Secondly, we also have stories of companies that have raised tens, if not hundreds of millions of dollars of capital from mainstream venture capital and private equity. You'd be hard-pressed to name a VC that doesn't have an investment in a certified B Corp or a benefit corporation. You know, whether it be from Lemonade to Allbirds, like the list is long of folks that are now deemed the new unicorns and are raising money at billion-dollar valuations, and they are committed legally to consider their impact on all their stakeholders. And so we do have some good evidence, but it's still early days. And one of the things we're excited to see is that ultimately the benefit core structure will be tested in a court of law. And though it's been tested a few times, it hasn't yet been adjudicated. And that'll be pretty critical in the evolution of this movement. This one behind you.
Thank you very much for your time. My question is around, you'd mentioned that 4 countries currently have written into law this idea of a B Corp. How do you think a multinational organization should consider balancing the need to respond to doing what's right in the local context with balancing how an organization presents a unified face and saying this is what we stand for and this is, these are the issues that we care most about?
I think the question of local context is everything. I think it's everything. That doesn't mean that you can't adopt a legal framework that requires you to consider the impact of your decisions on your stakeholders, recognizing that that impact might look differently at the local context. And to that end, when people certify as a B corporation, let's use Danone. So Danone, the Danone Group has announced that it intends to certify by 2030. And the way that they're doing is it subsidiary by subsidiary by subsidiary. And I think they have around 160 subsidiaries. I think they have about 25 subs that they're going to do this year. And so the way that we've built our impact assessment, to your point, is it is implemented at the actual operating division. If you think about what we're trying to build, we're trying to build an operating system. A tool that people can use to manage and measure and improve their performance. It gets really diffused if you're doing it at Danone Global in Paris when they have operations all over the planet. And so they actually take the assessment in each market to evaluate the impact in each market. And to that end, we have 72 versions of the assessment based upon how big you are, where you're located, and what industry you're in. Now, I'm first to tell you that it's still a blunt tool, right? Measuring impact is incredibly challenging. It's a really nascent industry. But we're not going to let perfect be the enemy of the good. We're going to encourage people to use this tool locally to try to figure out what makes the most sense for that locale on how to improve their overall performance. So I couldn't agree with you more. And to that end, the way that we've grown our movement, we are now, I think people have used the assessment in over 80 countries. I think we have certified B corporations in over 60, I think. I think it might be 72, but I don't want to commit. So it's somewhere around, it's like a big number, right? And it would be the height of arrogance for a white dude in Berwyn, Pennsylvania to try to tell Latin America what the local context is for building a movement of people using business as a force for good. And so we partner with people in each market. We have local entrepreneurs in each market that are our sister nonprofits. There's Sistema Bay in Latin America. There is B-Lab Europe, B-Lab UK, B-Lab Australia, B-Lab East Africa, B-Lab Japan, B-Lab China, B-Lab Taiwan. It can go on, right? And the idea is that how this movement actually grows in each market depends upon the local context. In some places, there is a very robust nonprofit sector driving this movement, and it's about bringing in larger companies. In others, they have to build that nonprofit sector, that there isn't an ecosystem that exists around business as a force for good. The commonality across all of them is the certification. It's the only way we can manifest what it means to use business as a force for good, so you can point to a company that will show you that indeed I can eat and chew gum at the same time, right? I can scale profits and purpose. That is the commonality across the different global accounts. But your point's spot on.
Thank you for being here. You mentioned earlier that at your core, you're an entrepreneur, and I was curious if you could kind of go back to the start of B-Lab and how you were able to get that first sign-on from a corporation and then scale it to over 3,000 corporations now.
So the way that we've entered every market is with an intentionality of so you got to back up to start with what's your strategy, right? And our strategy, again, is really straightforward. Find leaders, encourage others to follow, right? Leaders are certified B corporations. They use our tools to follow 3,200 certified B corporations, 100,000 companies following. But to inspire the followers, you got to get the right 3,200. And that means when you enter into a market, you need to identify a community of leaders that already exists. They have to be in the right sectors. They need to be of disparate size. They have to be in disparate geography. And so our intentionality around our launch was to find those leaders in the different sectors of different size and say you had been a leader for the last anywhere from 30 years to 5 years. Here's the deal. We think there is a unifying platform that will bring this market together. The idea of a big tent where all of us can have impact beyond the four walls of our own business, where we can use a megaphone as a collective and do something greater than we can do individually. What we're asking you to do is to continue your leadership mantle, continue to be the first to raise your hand and join this movement and inspire others to follow. And if it doesn't work, guess what? No skin off your nose. You go back to leading another way. But if it does work, if this does catch on, the folks who are the founding certified B corporations in every market will be known. And so to this day, our 81 certified B corporations who are our founders call themselves founding B corporations. And we've done the same thing in almost every market that we've opened. So there's founding B corporations in Latin America, there's founding B corporations in Europe, there's founding B corporations in East Africa.
I think we have time for one last question.
Hi, Bart. So obviously we've established here that like business should be a force for social good, and as business leaders, future business leaders, I think it's important that all of us are having that conversation on a daily basis. What I found here in my experience is that often those conversations are very separate, right? So we talk about it in Kathy's social entrepreneurship and Dan's sustainable business strategies, but not necessarily in our marketing or in finance or accounting. So if you were advising Bill or Dean on Boulding,
It is the same.
what advice would you have for him on just how to get those conversations into all of our classes, including our core?
So I begin by saying I think Fuqua has been a leader on this now for decades. CASE is an incredible institution that has been at the forefront of driving this shift now for an awfully long time. So first, let's acknowledge where you sit, which is in a pretty good place. It's in a pretty good place. Secondly, the fact that you now have 3 new themes for this community that includes capitalism with a common purpose, if I'm getting the terms right, is pretty unique. That's pretty unique, and also should be celebrated. And I would view this as a journey rather than a destination. And so you're on this journey. You have a center that's one of the leading centers in the country with a new set of values that should infiltrate every class eventually. But that'll take some patience. Like change doesn't happen overnight. And I would tell you, I wouldn't advise Dean Boulding anything. I'd advise you. I'd advise you. And I'd tell you that this institution exists to build the next generation of leaders. That is its purpose. And if you all demand a different set of curricula to prepare you for the next generation of leadership, the institution will respond. And so I think that the power is not, Dean Boulding has already set the table for you guys. Like, it's sitting out there. And the question is whether you're going to grab it. So that's my advice, that I don't think this will be driven top down. I think this will be driven by you.
So on that inspiring note, thank you all for coming tonight, and let us all please give Bart a very loud thank you for speaking.